My name is Callie from the marketing department here at OUCU Financial. Thank you for tuning in to the home buying seminar today on your lunch hour. We know that a strong foundation of financial education has a value beyond your bank account. OUCU is your dedicated financial wellness partner, and our mission is to help you. Buying a home is a huge deal, and today our goal is to help you feel more confident during the process of buying your home. As the leading mortgage lender in Athens County, the OUCU mortgage team truly are the experts. So ask your questions today. Please send them into the Q&A chat at the bottom right of your screen. Click the three dots next to the regular chat icon and you will find the Q&A feature. And then we hope to have time for questions at the end as well. For attending today, you'll receive $100 off closing costs. On the last slide of the presentation, you will see a QR to scan for a digital coupon, but additionally, our originators will have the names of those attending today, and we can guarantee you'll be able to take advantage of this promotion. And thank you to our mortgage team for offering this to our members. This offer will be good through the end of the year. We'll be sending out the recording to all who are registered here in a couple days. And so now I'll turn it over to Shelbee Wagener, our OUCU Mortgage Originator, who prepared this very informative and valuable home buying seminar for you today.
Hi, everyone. My name is Shelbee Wagener. I am a mortgage originator here with OUCU Financial. I have been an originator for about 6 years now, and I did want to give the opportunity to Laura Humphreys to introduce herself as well.
Good afternoon. My name is Laura Humphreys, as Shelbee said, and I am the Mortgage Operations Manager. I review all of the files up front. I perform credit checks, review secondary market eligibility, and ensure the loans are compliant. Thank you very much for joining us today, and I will hand it back to Shelbee so we can get started.
So again, welcome to the OUCU Home Buying Seminar. We are so glad that you joined us on your lunch hour today. Next, we are going to just go over our objectives for the day. So we're going to be going over the mortgage process, what you might need in order to qualify for the loan, PMI or private mortgage insurance and what that means for your loan origination process, closing costs, and what loan types are available for you here at OUCU Financial. Okay, so the first part is your mortgage process. So it is a big, overwhelming, maybe type of process that you're not familiar with, and that is completely fine. That is why I'm here. I do this day in and day out. So again, I'm your expert here, and there are no silly or dumb questions. So if you do have any of those along the way, please feel free to reach out to me or my team. Okay, so during the process, so we're going to kind of go through this flow chart kind of quickly, and then as we go on through the slideshow, we'll kind of break those down and go into a little bit more detail. So first, you're going to submit your application. Then the contract comes for the new home that you're purchasing. Then the appraisal comes. While the appraisal is completed, we'll also have a title search completed. Also, during that time, you'll have any inspections that are indicated by your contract. You'll also be finalizing your homeowner's insurance once we have a closing date. And then the closing happens. You sign all of the legal documents, and then you are officially homeowners at the very end of that process. So you might be wondering kind of where to start. And so that is where we'll go on our next slide. So pre-qualification. So this is your first step. So this is going to determine your path and if you're ready and kind of what to do to be prepared if you're not ready. So in this step, we're going to be estimating some payments based on maybe what you've been window shopping for and what your loan amount is. So that's also going to go into your down payment availability, whether you're going to have family that's going to be gifting you some funds or if you have it saved already, those kinds of things. Those are all going to be questions that I'll be asking you. Also, as part of the pre-qualification, it's a good idea to know kind of where your credit stands. A good ballpark is good enough. That way we can kind of talk about that and what that might mean for availability. Okay, so the next one is going to be actual application. So there are several different ways to get your application submitted. This all includes providing some supporting documents. So we're going to be collecting all of your credit details. So this is going to be the hard pull. We're going to be asking for your pay stubs, your W-2s, those savings account statements that I mentioned. Maybe you're pulling from retirement. We'll need those statements. All of those things would be required for a approval to be provided. We do have the ability to have you securely email all of those documents over, or you can upload them directly into your application. So you don't have to come in and drop off hard copies by any means. But if you prefer that, that's completely fine as well. You can do an in-person drop off at any of our branches here in Athens. Also, as part of the application process, we're going to go over some disclosures and have you sign those. It's just to say, hey, we applied for this loan. These are the initial terms of the loan that we've talked about and reviewed, those kinds of things. And electronic signing is also available for this. Once you provide all of the supporting documents that we've requested and signed all of your disclosures, we then send your file for underwriting review. And so this is kind of where the approval or pre-approval process comes into play. So that is where we come to next. Okay, so pre-approval. This is also what we refer to as credit approval. So what the credit union does is we actually do what's called an upfront underwrite. So that's, again, why we're asking for all of those supporting documents up front. We're pulling your credit. We're doing all of those things kind of up front so you can move forward with an approval letter and have a great understanding of where you stand for that approval. So again, this is going to, we're going to offer you to, we're going to offer a certain amount based on your income, your credit, and your down payment availability. And this is going to be good for 90 days. And this is going to be subject to no change in the application information. So this is huge. So changing jobs, going self-employed, using all of your down payment money, taking out credit cards, maxing out what you currently have, all of those are big no-nos in the mortgage lending world. So once you apply, we kind of want everything to stay as it is on your credit profile for your debt ratio purposes and those kinds of things. And most realtors do require a pre-approval letter prior to showing properties, especially in today's market where inventory is pretty low and things tend to go pretty quickly. Okay, so let's say that you're approved, you are shopping, you find a home and you make an offer, it's accepted, and the next part is the contract. So the contract is your legal document that's drawn up between you as the buyer and the sellers of the property. So the contract is going to determine your purchase price, any inspections that you're requiring as a contingency, if the sellers are going to be crediting you anything towards your closing cost, all of those different things. It's also going to give the address of the property, the legal description or parcel numbers. It's just going to be the detailed legal contract that's built between, again, buyer and seller. Okay, so once you get under contract, we do ask that you send that contract to your originator or myself. That way we can get your application updated per those per those purchase agreement standards. So we're going to be taking a look at all of those, updating all of that information, and having you sign updated disclosures, going over all of that. And that will bring us to the actual process of the mortgage. So we're going to be requesting the appraisal services, the title search, typically at the same time. And then also inspections are going to be kind of going on around the same time as well. Sometimes they happen before we order appraisals, sometimes they're happening about the same time. So it just depends on your specific property. An appraisal is requested by OUCU to determine the market value to ensure the home is worth the price you're paying. So this is important because we don't ever want our borrowers or members to be overpaying for a property. So if the appraised value comes back as more, then great. That means that you have some equity going into it. If the appraisal comes back for less, then that gives you some negotiation room to go back to the sellers if necessary. A title search is also requested by OUCU from a title company to ensure the seller's legal ability to sell the home. So they're going to be checking for any encumbrances and voluntary liens such as tax liens or judgments. The seller is obligated to transfer the title as clear and unencumbered. So that's where the title search is going to be coming in to make sure that whenever you inherit this property, that is free and clear and you're good to go. Your inspections are determined, again, by your contract. Typically, what we see here at the credit union in the Athens area is whole home, pest, septic, and gas line, if those are applicable. We do not require those inspections, but if they are listed, we're going to ask for proof that they passed that inspection with receipt or the invoice to collect at closing, because typically those are borrower paid. Okay, so let's say the appraisal's back, looks good, title search is back and looks good, all the inspections are passed. The next step is going to be finalizing your homeowner's insurance. So myself and my team will reach out and, of course, give you step-by-step reminders as to what you should be doing during the process, because we do understand that it is big and overwhelming. There are lots of moving pieces and parts. So once you're under contract, you should be starting to shop around for homeowners insurance, again, so you can finalize the policy when a closing date is determined. So all borrowers have to be listed on the policy. Your dwelling coverage is going to be your minimum loan amount, and your agent that you're working with on this policy will need to provide OUCU with the final declarations page and the receipt. Again, we will go over all of this with you step by step during your process, so there is no need to panic and try to remember every single thing. Again, we are here for you every single step of the way. Okay, so once you finalize your insurance, we've got a closing date. We are good to go. You have the date and the time. So then you show up to the title company. Closing is completed in person at the title company that completed your title search. You'll want to just make sure that you take your photo ID with you, because they will be verifying that you are who you say you are before you sign off on all of those legal documents. And then at the very end, some people like to say they sign their life away, and there are a whole lot of signatures that go into it. At the very end of it, you are officially homeowners. So that is the great end of the crazy process. So next, we're going to kind of go over what loan qualifications we have. So we're going to kind of talk about your credit score, what credit score translates to, what down payment's going to be required, and all of those types of things, okay? So the first thing is going to be your credit score. Your credit score is a 3-digit number that we use in order to predict the risk of serious default. These can range from 300 on the lower end all the way up to 850 on the excellent end. For the next portion of it, so we're definitely going to be taking a look at your score, but there's also another portion of your credit that we're going to be taking a look at as well. So we also are going to be looking at your credit history. Most borrowers are going to need a minimum of 3 credit references with a 2-year history. So what that means is, let's say you have an auto loan, a student loan, and a credit card. So that would be 3 credit references. And let's say that you've had all 3 of those for at least 2 years. So that is exactly what we're looking for whenever we're talking about credit history. If you do not have these credit references and 2 years of history, we do potentially have other options for you, such as non-traditional credit, but we can talk about that on an individual basis should we come to that. So you might be asking, why is credit so important? So again, we're going to be looking at your score, your credit history, all of those things. And credit is especially important because it's going to obviously go into your loan approval, and it's going to also translate into how much down payment we're going to require of you. So we're just going to take a quick look at a purchase price of $100,000 just to make some happy numbers here. So a 660 credit score, we can look at a minimum of 5% down. So that would be $5,000 on $100,000. Should you fall below that threshold of 660, so let's just say 659, your down payment requirement is more than likely going to be $20,000. So, you can see the big difference between, 660 and below. That's a big chunk of change between the two of those. That's a $15,000 difference if we're looking at 100,000. So again, that is why it's so important, why we're going to be looking at all of those different things, making sure that, you are going to repay this, life-changing loan, of course, for your home and those kinds of things. So that is that portion. So we are going to be looking at your debt ratio as well. So this is calculated by your current payments versus what income you have coming in. So like I said earlier, if you have a student loan, an auto loan, and a credit card, we're going to be taking a look at what those current payments are and what this new projected monthly housing cost is going to be. So your new loan payment, any PMI you're going to be paying, and taxes and insurance, with what your current income is. Okay, so again, it is going to be used to measure an individual's ability to manage that monthly payment and repay your current debts. So next, we're going to go on to an example just to kind of give you guys an idea on how we calculate all of this. So we're going to be taking your total debt, let's just say $1,500, and your gross income. So that's going to be before deductions or any taxes are taken out. This is going to give us a 37.5% debt to income ratio. Our maximum debt ratio is 43% for, again, all of your current debts plus your new projected mortgage payment. So we like to see it a little bit less than that, but we can stretch it up to 43%. My job as your mortgage originator is not to sit in my chair and make you house poor. I do want to make sure that you have the ability to live life outside of your four walls. So that's why one of the main things that I ask in our very initial conversation is going to be, what do you feel comfortable paying on a monthly basis? And, we'll kind of build off of that. Okay, so like I said, your housing payment breakdown. So all of your debts plus this whole housing payment is going to be how we calculate that debt ratio. So that's going to be your principal and interest. So that's your loan payment. Any PMI, so anything less than 20% down payment is going to require PMI, and that's an additional premium that you'll pay with your loan payment to the credit union on a monthly basis. Homeowners insurance and real estate taxes are not going to be collected as part of your loan payment, but we do calculate that as part of your debt ratio because we understand it is a required part of homeownership. For your homeowners insurance also, we require the first year to be paid up front prior to closing, once we have that closing date. And after that first year, you can get on a monthly payment plan with your agent directly if that works best for you. Also, with your real estate taxes, we can We can't, but the county auditor is actually offering an escrow directly through them. So you can set up a direct escrow with them. So you don't have to worry about, that big bill coming due once or twice a year. You can just pay it on a monthly basis. It just isn't going to come to the credit union and us pay it on your behalf. And again, we can talk about that a little bit more once you guys are ready, or once you're ready to apply. Okay, so the next portion is going to be down payment. So the higher the down payment is going to equal a lower monthly mortgage payment, because that's going to lower the total loan amount that you're going to be needing from us in order to make the purchase. Your down payment is going to be due at closing with the rest of your closing cost. So there is typically a wire that's required at the very end of the process. Again, we'll be reminding you of all of this. Again, down payment is due at closing with those closing costs. The next, we're going to talk about what our requirements are for that down payment. So we do have a 5% down payment minimum for most buyers. We do have a 3% down first-time home buyers option. So that is a great option for our first-time home buyers. We can take a look at different assets. So like I mentioned earlier, we are able to look at gifted funds. So if your mom or dad or a relative is wanting to gift you some funds to help with this big transaction, then that's something that we can look at and talk about what requirements kind of go into that. But that is an option for that down payment. Unfortunately, we do not have any 0% down options. So 3% is going to be our minimum for first-time home buyers, and 5% is going to be for all other buyers. Going into the down payment, we do require your down payment funds to be your own funds. And so what that means is that your funds have been in an account in your name for at least 2 full statement cycles. So that means that, if you give part of your paycheck to your mom to put into a separate savings account so you don't touch it, but that savings account doesn't have your name on it, we're not going to view those as your own funds. So that's why we bring this up. We do have to show that it's in an account in your name for at least 2 statement cycles. Large deposits are something that we'll also talk about. We can't use cash as a down payment source either because we can't source it. So it does have to be available in a savings account, a retirement account, as gifted funds, all of those things, and we'll be checking for any large deposits. Any large deposits will have to be verified and sourced as well. So just keep all of that in mind. Like I said, myself and my processors will be kind of skimming over everything and asking these questions as we process, but it is just something to keep in mind. Okay, so I have talked about private mortgage insurance a few times, or PMI is what we refer to it. There are a lot of acronyms in the mortgage world, so I do apologize. So PMI is required for less than 20% down. It does allow for a smaller down payment amount. So like I mentioned earlier, we can do a 3% down payment for our first-time home buyers. We can do a 5% down payment for all other borrowers. So PMI, or private mortgage insurance, is a wonderful thing, just in case you don't have that 20% down laying around or available to you. So it allows you to own a home a little bit faster and a little bit easier. Another great thing about OUCU and our PMI requirements is that it is paid with your monthly mortgage payment, so you don't even have to think about it. It's something that we take care of on your behalf, and it's not lifetime. So what that means is it may be removed after 2 years and once you reach 78% loan to value. So what that means is if you make a large principal reduction payment within that 2 years and you hit 78% loan to value, that's going to automatically drop off after that 2-year mark. What we're seeing is typically it takes a little bit longer than 2 years to get to that mark, but it does drop off eventually, and a refinance is not required, and that kind of thing to get that removed. So that is a great thing, again, about financing with OUCU. Homes with more acreage tend to be a little trickier with PMI, so we do have to consider that. If you're looking at a lot of acreage, we're talking probably 20 acres plus, so keep that in mind as well. PMI also does require reserves. So what that means is your whole housing payment, so your principal and interest, your PMI premium, your taxes, and your insurance. So they're going to be taking a look at what that whole payment amount is, and they want to have 2 months of that amount saved in an account somewhere as that reserves. So we'll be verifying all of that up front as well. One other thing about PMI is that it is not available for condos. So if you guys are interested in condos at all, 20% down is required for that home type. Okay. So our next section here is going to go over closing costs. So why they're important, what they are, and why they're required. So our next one, so this is kind of a flow chart, if you will. So here's your home. Here is the seller and you, of course. So they're used to cover the cost of services to legally transfer the property from the seller to the buyer and to transfer the funds from the buyer to the seller. So the title company that I've mentioned a few times, they are known as the escrow agent. So they're going to be taking your new loan amount plus, all of your closing costs, those kinds of things, and they're going to be kind of dispersing them out to where they go. So again, home, seller, funds to you, and then you are a homeowner at the very end of the process. That's a simple flow chart to kind of get through that. And there are different types of closing costs. So you're going to have the loan cost, so origination. OUCU actually does not have any origination costs, but we do have appraisal, credit report fees, those kinds of things. So that kind of goes into those closing costs. We do have legal, so your recording of your new mortgage, and of course your deed. So the transfer of ownership from the sellers to you, that is going to be part of the legal portion. Also, I mentioned earlier the title. So they're going to be doing that search to make sure that there are no involuntary liens or anything that the seller is not aware of. And if there are any, that those are cleared up before that transfer happens. Also, there's a settlement charge on there. So the total amount of your closing costs are going to vary by your loan type. So whether you do a conventional fixed rate or if you do an ARM, it's also going to vary by your credit score. So next, that's actually what we're going to get into now is your loan types that are available here at OUCU. So typically, when people think of mortgage, it's a conventional 30-year fixed. Again, we offer anywhere from a 10-year all the way up to a 30-year term. So we do have our rate sheets available through our website, and that's something that you can sign up for. But we'll get to that a little bit later. I'm sorry, I'm jumping ahead of myself here. So this is going to be a fixed rate, a fixed payment, and we do want to note that this is best suited for long-term ownership. So if you pay a little bit more in closing costs, it's going to be most worth it if this is your forever home and you're going to be here for a long amount of time. The next loan type is an adjustable rate mortgage. There is a fixed period and an adjustable period. The rate is determined by an index plus a margin. So we're looking at an index that is set by the U.S. Treasury, the 1-year U.S. Treasury, and by our margin. And this is best suited for short-term ownership. So let's say that you don't feel like you're going to be in this house for maybe more than 5 to 7 years. And this is your starter home and you want to just invest in a property until you find your forever home in a few years. Or maybe you feel like you'll maybe move out of the area within that time frame as well. So this is going to be a good option for that type of ownership as well. Because again, it does have a little bit of a lower rate than the 30-year conventional, and it's going to be lower in closing cost overall. So our adjustable rate mortgage is a 7-1. So that means that you're going to be locked in to your signing rate for 7 years. Then that means it can adjust each year after that. So there are caps in place to protect you, so it can't just adjust willy-nilly or exponentially. So the caps are 2% each year. So after your 7 years, so on year 8, it can adjust that 2%. And then over the whole life of the loan, it cannot adjust up more than 6%. So what that means is, let's say that your signing rate is 6%, your rate would never go above 12% over the entire life of the loan. Okay? So again, this is a really good option, again, for maybe you have a lower credit score right now and you're looking for options for maybe lower closing costs, or you're looking for something that is more short-term, or something that is maybe considered a unique property. But again, those are all details that we'll talk about a little bit later in your process. There were some questions whenever we sent out the registration. There were some questions about construction loans, and we do absolutely offer those products. It is on our adjustable rate mortgage, so that 7-1 that I mentioned on the last slide. It is a one-time close, so that means that you close one time, and then the contractor does all of the work, and you pay on the interest on the construction loan during the construction process. And then once it's completed, you don't have to go to closing again, pay closing costs again, all of those things. Your mortgage just starts once the completion of the home. There is a 6-month construction period. So again, that's that period that we're giving to the contractors to get that home totally built from the ground up. Or if you're going to do a manufactured home, that's something we can talk about as well. We are able to do up to 95% financing, so we can obtain PMI for that. Typically, the credit score requirements are a little bit higher for construction. I'm going to say it's normally about a 680, but we can look at each file individually, of course. So again, we can talk about all of that if you guys want to talk one-on-one with me about anything like that. You must use a general contractor, so we don't allow any self-builds. It has to be processed start to finish and handled by a general contractor. So they're going to be giving us a contract that we're going to be working off of and paying them according to a draw schedule that they give us. So again, all of those details can be talked out in an appointment with me, or we are going to offer a construction seminar. I believe it's going to be in May, so keep your eye out if you are interested in maybe just learning a little bit more about the construction itself. Or again, I am available for appointments. I can do phone, virtual, or in person, of course. So again, just reach out to me directly if you guys do want more information on anything that we went over today, including the construction loans. So after all of this, you guys might be wondering, well, why choose OUCU? There are a lot of other lenders in the area, and we understand that. But I may be a little bit biased, but I do believe that OUCU is the best. We have a great, easy application process. You can apply online 24/7. You can come in and meet with me, again, by phone, virtually, or in person. Another great selling point is you never have to wonder where your mortgage is. OUCU retains all servicing rights to all of our mortgages, so you will not have to worry about if it's being sold to a different lender, or who you have to make your payments to, or I have this question and I'm just not sure who to contact. You will always, always contact OUCU. Our mortgage team is wonderfully knowledgeable and friendly and lovely. And again, I might be a little bit biased, but we are wonderful to work with. You also are going to, like I said, you're going to make your payment to OUCU for the life of the loan. That also brings me to convenient payments. So you can make your payments through online banking, or we have a phone service now that you can call in and make transfers and those kinds of things. We are, like Callie mentioned in the very beginning, we are the top mortgage lender in Athens County. So I think that kind of speaks for itself, and our abilities, and that we care about our membership and your ability to become homeowners. So that is why I believe that you should choose us. And like I mentioned earlier, you can apply online. Our system that we use is Mortgage Click. So you can apply 24/7. If you fit within that box of standard underwriting credentials, it's going to give you a pre-approval letter right then and there. So that is awesome. Like if you find a house in the evening or on a weekend or on a holiday, let's just say, and you want to make an offer, but you need an approval letter or want an approval letter just to make sure, you can do that anytime through Mortgage Click. So that is one thing that I really love about our system. You can also view current rates. You can calculate payments. You can also sign up for a rate tracker. So with the rate environment that we're in right now, you can actually sign up for, hey, I'm looking at the 30-year fixed. I want to keep up with what the rates are doing on a day-to-day basis. And you can get emails on, whenever the rates do change. So that is a great tool that's available for you there too. The loan consultant that's mentioned there, that is actually a really amazing tool as well. So you can plug in. So let's say you find a house over the weekend and you just want to plug some numbers in to see what that's going to cost you. You can plug in the purchase price, what you want to put your down payment in at, a ballpark of what your credit score is, and what type of home you're looking at, and that kind of thing. And then it will show you all of those options that are available to you. So it's super user-friendly. Again, it's going to show you all of those options that are available based on the information that you're giving it. One thing that we did not mention in this webinar that I do want to mention really quick before we end this is we do also offer land loans. So that's going to be raw land. We can look at, properties that don't have any utilities at all, or we can look at land that does have maybe some utilities on it, those kinds of things. We do offer those types of products, and we don't have any build requirements per se. So if you wanted to purchase land strictly as recreational use, you want to ride your buggy on it, you want to go hunting on it, then great. We're not going to require you to build a home on it in any certain amount of time. However, if you do want to build a home, then of course you can always come back to us and we can help you with that process as well. Okay, so since we have a little bit of time at the end, Kaylin asked a really good question. Credit and debt ratio requirements are similar to construction loans, yes, in a way, but the loan options are going to be different. So we do offer fixed options for land loans. They're not an ARM. but the terms are a little bit more reduced. So that'll all depend on the type of land you're looking for and the down payment that you're looking for as well. Typically, the longest term we can offer on the land loans are 15 years. Thank you for the question. If you are ready to make an appointment with me, you have an additional questions, that QR code is there for your digital coupon of $100 off if you close within this calendar year with OUCU. We are going to have a list of everyone that attended today and registered. So again, no worries on that if you don't have the ability to scan that. All of my information is listed here. I am an MLS licensed. And you can make an appointment with me directly through that QR code. One more reminder, we can do virtual, in-person, over the phone appointments. So you don't necessarily have to take off work and come to the branch if that is something else that's better in your schedule. So again, I want to thank everyone for attending today. I really appreciate all of your time. Again, we're going to be sending out a recording to everyone that registered before we log off for the day. But again, thank you so much for your time.
Thank you, mortgage team. That was a really lovely presentation. Thank you for all who attended. I don't personally think Shelbee's being biased. I know that you are in great hands with the OUCU mortgage team. We're excited to make these home buying dreams come true for you. Everyone, have a great rest of your day and look for more seminars and opportunities to talk more with our team. Thank you.